Yahoo Finance's Rhonda Lee is back with us, along with Geltrude and Company founder Dan Geltrude. So Dan, I want to bring you in here. A lot of people are sort of looking at the clock, getting a little bit stressed out. Perhaps their finances, the receipts are a bit of a mess. What are the first steps people should take in sort of deciding whether or not to file an extension or to try and rush to the finish?
Well, you should never really rush through the process of having your tax return prepared because you want to make sure that your tax return is complete and accurate. The last thing that you want to have happen is you file your tax return in a rush, and then in 30 days or 45 days, you get a nice letter from the IRS saying, oh, there was a problem with your tax return. So you certainly don't want to rush through the process. However, if you know that you're going to be getting a refund, you certainly want to file that tax return as quickly as possible because you don't want the government holding your money. At the same time, if you know that you're going to have to pay with your tax return, well, then you truly wait to hit that button or put it in the mail until the last minute possible.
Hi, it's Rhonda. So I want to focus in on our people who they owe, and a large chunk of them wait until the last minute because, like you said, you don't want to give the government that money. For people who are not paying electronically and they're putting that check in the mail or they're thinking about paying by cash, what tips do you have for them? Like if they're going to do it by mail, it used to be people would run to the post office at 11:59. Is that a good idea? Or should they be sending those mail-in checks via, next day delivery?
Well, as long as the envelope is properly stamped by the due date, in this case, April 18th, sending your check through the mail at that last moment, and by the way, you should also do that by certified receipt to make sure that you can prove timely filing and timely payment. That's really the way to go. Of course, if you're electronically filing, you could have those funds wired directly from your account. So either way, that's preferred. Now, there are people who say, well, I would like to be able to pay by credit card, and certainly you can do that. However, when you are paying your tax bill by credit card, the IRS is actually going to hit you with a service fee. So why do that? They're taking enough of our tax dollars. I don't think that we have to add a service fee into that number in order to pay our tax bill. So I think regular mail on a timely basis by certified mail or electronic filing with the funds coming directly out is the way to go.
Dan, let's talk about a lot of provisions that people are thinking about now. What are we, third year into the pandemic? Work from home was a big one. And I know a lot of Americans claimed deductions last year, whether it was their rent, the equipment they purchased in order to be able to work from home. What's changed?
Well, we actually have to go back to the tax law changes under the Trump administration. And during that time, most of the itemized deductions disappeared. And one of those related to having those home office deductions. Those disappeared. Now, what happened during the pandemic, and this was a question that I got all the time, well, I'm working from home and I am incurring various expenses related to being able to do my job. And that's the most important aspect here, to do my job from home. Well, if you are an employee, meaning that you are getting a W-2 for the work that you do, you are not entitled to take those home office deductions. So that was problematic and a surprise for people going back a couple years ago. It was more of a hurt when they said, well, now I'm working at home because of the pandemic. If you're going to be able to take those types of deductions, you actually need to be an independent contractor. In other words, having your own business. Now, when you do that, you are entitled to take all of those expenses related to your business activity as a deduction against your income. But you can't do it as an employee.
Now, as we stay with this topic of COVID, we saw a lot of generosity, a lot of people giving to a lot of good causes, GoFundMes to help perhaps people who were struggling, charities. But what do people need to know about what does and doesn't count as charitable giving as defined by the IRS?
Well, when you're talking about giving money to charity, that is supposed to be specifically for a charity recognized by the IRS. Sometimes you hear that 501c3 thrown out there. So yeah, that is recognized as a public charity for which when you make a donation, you are able to get a tax benefit for. Now, what's happened over time, again, I go back to the changes made through the Trump administration. If you are not itemizing your deductions, for example, because the standard deduction was raised so high, people were not getting any benefit for making charitable donations. So what we have there is if you are single, whether you itemize your deductions or not, you are able to deduct $300 of charitable giving, or if you're married filing jointly, you can take up to $600. So even if you're not itemizing your deductions, there are still some benefits to be had by making charitable donations to recognized charities.
And Dan, one more question here as we stay on the COVID theme, because I understand there's some changes with unemployment benefits between last year and this year. A lot of people still having to file on that as well. What should they be aware of?
Well, I think there's going to be a lot of people in for a surprise this year when they're filing their tax returns related to unemployment benefits that they received. Because if you go back to 2020, because of the pandemic, the federal government said, you know what, we are not going to be taxing unemployment benefits. Okay, great. But that expired going into 2021. So what happens is that there were people obviously still receiving unemployment benefits last year, and they didn't consider that it was going to be taxable. Therefore, they didn't make estimated tax payments or have the appropriate withholding. Now they go to file their tax return, let's say this week or into next week, and what do you know? I thought I was getting a refund, but now I have to pay because my unemployment benefits are now taxable. So that's one thing that people have to be aware of, that they could be in for a surprise.
We are back with Geltrude and Company founder Dan Geltrude. Dan, we've got, 6 days left to go until those taxes are due. What's the number one question you've been getting?
The number one question by far is, when am I getting my refund? Of course, anytime people know that they're getting a refund, they want that money as quickly as possible. So right now, the IRS has actually been pretty good this year, and for the most part, getting refunds has been taking place within about 21 days, about 3 weeks for those refunds to be issued. So that's really positive. But, if you want to make sure that you're going to be getting your refund as quickly as possible, there are a few things that you can do. First, you should be filing your tax return electronically. That speeds up the process tremendously because it's basically instantaneously that you hit the button and your tax return is received by the IRS. The second thing is that you want to notate on your tax return that you want direct deposit, meaning that your refund is going to be deposited directly into your bank account. Now, doing those things will significantly speed up the amount of time to get your money. Emphasize that, your money. Now, to answer the question of where's my refund, there is actually a portal on the IRS's website, irs.gov, called Where's My Refund? So you can go into that 24 hours after your tax return has been received, and let's assume you file electronically. Now, the next day, the IRS is now tracking your refund and the process for which you can go on the portal and actually see where your money is.
So here's a question. You're filing your taxes and you thought you were getting a refund. You find out you owe, and it's much larger than you anticipated. You don't have the funds. Is an extension to file the same thing as an extension to pay? What do I do if I'm in this situation?
Well, there's two pieces to this question. First of all, let's talk about when the tax is due. So just because you don't have the funds to be able to pay what you owe with your tax return, and you say, oh, no problem, let me file an extension. The extension is only for filing the actual return. It doesn't apply to paying your taxes. So in other words, this year, your taxes are due April 18th. You could file an extension in order to actually send the return in, but you must make that tax payment. Now, the second part of this goes back to, okay, I didn't expect to owe this much. I don't have the funds to pay my taxes. What do I do? First thing, file the tax return anyway. Send the return in because you don't want to have a situation where you have a failure to file penalty along with interest. So send in the tax return. Also, whatever funds you do have to make a payment, do that as well. Now, you do have a couple of options. You could apply to go on an installment agreement, which is through Form 9465, and that will give you 72 months in order to make that payment for your taxes. Or you could also file for what's called an offer in compromise, which is basically to say, I don't have the money. This is what I have right now. So how about you accept this number, which is less than what you owe, as full payment? So those are what your options are if you don't have the funds to pay your taxes on April 18th.
And in terms of perhaps major life changes, say you got married last year and you're trying to decide whether it's better to file jointly or separately, how do you maximize your returns and avoid any marriage penalties?
Yeah, you know, that marriage penalty, that really bothers a lot of people, which it should. I mean, I don't think people want to look at their marriage as a penalty, do they? But it can turn out that way with taxes. So what you really have to do, and this is where it comes into, you have to consider whether you want to have a professional actually prepare your tax return, is that you prepare your tax return and you input all of the numbers based upon which person earned and which person incurred the various deductions. And then when you're talking about, I know before you were talking about the technology and filing tax returns. So now you have the ability to actually switch back and forth to say, if I file jointly, what's the impact for my taxes? If I file separately, what's the impact on my taxes? And being able to compare the two is what will determine what's most beneficial in how you file your tax return.
We do want to thank you for your time this afternoon. Lots of great advice there. A big thank you to Dan Geltrude there. Well, from all of us here, thanks for watching. Do stay tuned for more Yahoo Finance Live coming up after this break.